Good afternoon, everyone, and thank you very much for joining. This is the NFP live trade with myself, Russell Shaw. I'm a senior market specialist at FXCM, and my email address rshaw@fxcm.com. Today is, of course, Friday. It's the 3rd of December, 2021. I'm just going to bring up our high-risk investment warning. We've got about 8 minutes to the non-farm payroll. Just want to do a quick check. Can you guys see my screen and hear me? If you can just confirm, just to make sure we're all good to go. I'm going to bring up the market commentaries disclaimer in the meantime as well. Okay, cool. All right. Thanks, guys. Hey, Howard. Nice to have you on the webinar, and thank you to everyone for joining. Okay, let's just bring up our references. MarketScope 2.0, Trading View, Forex Factory. I want to just let you guys know this is a live trade on a live account. So it's not a demo, it is live. So I just want to confirm that. All right, MarketScope. So I think everyone's familiar with MarketScope. So this is the screen that we'll be trading off of. It's my NFP layout. Pop that down. Trading View is this. The reason I brought up Trading View is because I might want to just take a look at the US dollar and the FXCM dollar index now. Because I'm an employee of FXCM on my live account, I actually don't have the dollar index. We're not allowed to trade it as employees. It's just in terms of compliance. So, but it's a terrific index or basket to keep an eye on. So I may just keep an eye on this on the Trading View screen. And Forex Factory. Okay, so I'll just click here. And you can see that we're waiting for the on-farm payroll data here. It's due in 6 minutes. I don't think this is going to be particularly important. Unemployment rates generally lagging, and this definition of unemployment is a very narrow definition. But this, I think, is certainly important. On Forex Factory, they're looking at 553,000. Standard & Poor's consensus is 581,000. So we'll just keep an eye on that. Average hourly earnings will be important because if it's higher than this 0.4%, it's inflation. So those are the two to keep an eye on. The unemployment rate, secondary to that. We'll try to get the data as quickly as possible. I'll click on this sort of request actual, but it's going to lag. It's going to lag. We'll see the market movement before. Let's just go through basic strategy here. Okay, we've got about 5 minutes, so I'm going to just bring up my Microsoft Paint. All right, so just to run through our goal, what we would consider a successful trade. So a take profit of 20 pips. Okay, so if we can get 20 pips off of this, we'll consider it a job well done. If we get stopped out, and we just take a loss of 20 pips, we'll consider it a job well done in terms of risk management. So those are the target, sort of the absolutes. However, another objective would be to reduce risk as quickly as possible. And I'll explain that, how I'm doing that. Sometimes it's not possible. I think two non-farm payrolls, I think I actually got stopped out at the 20. But generally we can get the stop loss up fairly quickly. It obviously depends on if the market's cooperating with the way I'm analyzing the market, right? So these are our sort of guideposts. In terms of how we are going to trade, we're not going to put on a position before the non-farm payroll. We're going to put on a trade following the non-farm payroll, and the way that we generally do that is we're going to see if the first move is going to be what I call an impulse up, or is it going to be an impulse down. So one way or the other, this is what's going to happen depending on the print. What we're going to do is we're going to wait for a correction then. So if it's a impulse up, we want to pull back to the downside. If it's an impulse down, we want to pull back to the upside. That's kind of where we're getting interested. And then we want to try get in on the correction, as close to the end of the correction as possible. Now, that's the strategy. Will it, is it guaranteed to work out? Of course not. That's why we've got to put in our stop loss of 20 pips. I'm just thinking what else we need to know. We've got just less than 3 minutes here. So 20 pips, take profit, 20 pips stop loss. We want to try and get that out as that we want to reduce that risk as quickly as possible. So if we take a loss and it's 7 pips, job well done, because that's managing our risk. Yes, okay. Just want to talk about possible scenarios. I'm going to have to be really quick here. So just bringing this up. So if we get a good non-farm payroll, I think that's dollar. That's going to support the dollar. The reason I think that's because the Fed is looking to tighten. Okay, they've made that very clear at a Senate hearing on Tuesday, Wednesday. They're looking to tighten. If there's inflation, they're going to be wanting to tighten. But if there's a miss, well, this has been a very tricky week because of the Omicron variant. So maybe then risk off kind of takes over. But if we get a good number here, I would be expecting to short euro, long US dollar. So I'll discuss that as the print comes out, and that's the sort of strategy we've got now. Less than a minute, we've got 55 seconds. We're going to get it out. If there's any questions, please go ahead and type those through. In the meantime, I'm going to bring up my layout. Okay, and we'll do the trading generally on the 1 minute, but I've got an hourly and I've got a 15-minute that I might toggle between. And I might go quiet, but I haven't disappeared. Well, I hope I haven't disappeared, because sometimes there's technical issues, right? But it's just me kind of trying to think what's the best choice to make. I mean, it's quite pressurizing when you're trading in front of a sort of a crowd, right? So we'll see how it goes. We've got now 10 seconds. We should see some sort of spike in the next 7 seconds, 6, 5 seconds. Oh, wow. All right, so money jumped into the euro. So I'm guessing we've got a bad number that's come out. So did you see that? So there is a lot of money that's going into the euro, so long euro, short US dollar, which is kind of the opposite of what I was thinking. Let's see if we can find some numbers here and then just talk about those. Oh my goodness, 210,000 is what I have here. Expected 550. That's a heavy miss. All right, let me just bring up this and let's try and bring it up. So you can see we've got a big miss here. Forget about the unemployment rate. Okay, this is lagging, but we've got a number that shows inflation in check, and we've got a number that's showing that all is not good with the job market just yet, which is a surprise. It's very hard to get a bead on the labor market because there's just inconsistencies with all the data that comes out, and that is actually now hammering the dollar. Okay, so let's go see if we can put on a position. And just take a look at the hourly. It went all the way up to this R1 level, and this R1 level's act as resistance. Now, this is going to be a very tricky trade. It's going to be a very tricky trade right off the bat. I was hoping this wasn't going to happen because it's a disappointing number in a net dollar bullish environment. So it's kind of now in no man's land. Nevertheless, we're going to stick with our strategy, and we've always got that stop loss in if need be. So we've got an impulse up here, and we've got this pullback here. Okay, so here's the pullback that we spoke about. And we want to see if we can get in on this pullback. We're looking at a 1 minute chart, and we're going to use what's called a reference candle reversal as our entry mechanism. I'll explain that to you now. So a reference candle, it's effectively a swing low. Okay. So what we want is we want a candle that's got the lowest low in at least 3 candles, which looks like it's this one for now, unless this makes another low. And then we want the candle to the right of it to close above its high. That's why I've put this in as a measure. All right, so we're now seeing if we can get in on the correction down. And the reason we're using this is because if we carry on drifting down, this keeps us out of a bad trade. Then we don't go onto the wrong side of the trade. So that's the logic behind it. Okay, we've got 9 seconds left for this candle. So this is now an inside candle. So I think maybe the pullback here might be pretty close to being completed. Let's just see if we close above this candle here. So the market's a little confused here. So we've had this pullback, and the bulls, the Euro bulls, are now a little confused because the ECB is not going to be tightening anytime soon. The question now, of course, is the timetable for the Fed in doubt because of this this number. So here's the new lowest low. So I've adjusted my my measure, and I'm trying to get in on a pullback. Trying to time the pullback. Yeah, so Peter's just writing, all the stimulus has produced these number problems. I think that there is a point to that. I mean, the monetary policy adopted, we all know, is very unconventional, isn't it? So who knows what kind of side effects it's going to have. So I'm going to just move this down here. This becomes our new reference candle. Let's just put in an arrow there. Okay, so the low here, 113.4. Yeah, okay, there's a 4 pips difference between these two. All right, now we look like we may be in business. We just want to see if we close above this this line here. So we've got a fairly decent pullback here. It's all about closing. So we pulled back 62% of that initial impulse, but we just need the bulls to close above the high there, right? We've got 30 seconds left here. So 3 seconds, so we still don't have the opportunity to enter. We're just going to make this a little bit more prudent and push this up here. This is our measure line. Okay, we're getting pretty close here. We've got 40 seconds. Let's just see if the candle closes above our measure line. Okay, that's looking positive. We've got 20 seconds left here. Okay, that's looking better. 7 seconds. Okay, we're going to put on a position here. Okay, so here's our position. You can see the stop loss is over. This is 20 pips below us. So we want to get this up as quickly as possible. That's the first sort of task. And here's our take profit. So now it's all about managing, and unless there's an awful gap down, we've got an acceptable loss in, okay, cool. So we can get rid of that. Let's put in a resistance here so we can see this is what we are struggling with at the moment. Okay, and I want you guys to keep an eye on the slow stochastic. So in order for us to succeed in this trade, the stochastic needs to get to the 80 level. If it doesn't get to this 80 level, there's no momentum. Then our stop's going to be hit, which is clearly not what we want. But we'll just keep an eye on it. It's crossed over, and we'll see if that's going to help. So after this impulse move up, just to let you guys know, this is obviously a lot of volatility here. You can see that, but since then we're kind of moving sideways. So already you can see the volatility has narrowed. Can you guys see what I'm saying here? Can you guys see this? Just this area here is kind of now our range. So it's kind of, we've got this narrow range here, right, which is going to be problematic if we can't take off. Just going to the 15-minute, and you can see we're kind of wrestling with a central pivot resistance here. And let's go back. So again, I just want to reiterate, the volatility here is moving sideways, and that's making it a little difficult. Okay, let's just move this here. Okay, so let's just talk about the last 3 candles. Very short candles, you see that? very short candles. Again, no real emotion tied to these minute candlesticks. They're certainly not moving in the direction I want, but just keep this over here. Okay, just keep an eye on the stochastic. It's rolling back over, which is not what I want. Okay, 10 seconds, we'll get another candle here. Okay, so I'm just looking if this is another reference, sort of a reference swing low. I'm hoping it is. If this is a swing low, then if we can take out this peak here, that would be my first opportunity to move the stop loss up. But you can see that it's just there's some challenges there. I mean, the bull's certainly not in control by any means here. I wouldn't say there's outright selling either. So this was the reference candle here, Howard. This one over here. This one. And I'm looking to see if we've got another one here. And what we'll do is we'll just move this down. Hopefully the support kind of helps us. Okay. All right, Peter. Have a good weekend. All right, it's a little bit of strength coming in now, which is good. It's a bit of a slow burn at the moment. That's just a function of the volatility. Okay, got 15 seconds on this candle. Right, so this is actually a reference candle here. So sort of breathing a sigh of relief, although it's still just moving sideways, isn't it? And then we'll just watch to see if this is a contra. Hey Elizabeth, so we do a morning webinar called the DAX webinar, which you're welcome to join. These are monthly, so we'll hold a non-farm payroll every month, and then if I get time, we'll run one in the afternoon to do a scalp on the US Open. But that's generally it's a live scalp, but it's usually on a demo account as opposed to this one being a live scalp on a live account. You're welcome to email me and I can send you the link for our morning webinars. And again, just to just reiterate, we just are moving sideways, so it's a very slow burn. All right, so now we are in danger here. Let's just see what happens. So here's the contra to the downside. So this will take us out, it looks like. So peak, trough, lower peak, lower trough. And then the stochastic just, it's going to hit us there. Oh, very close. There we go. All right, so that was a pity. We never really just got the traction there, unfortunately. But the stop loss did its work, and we just never had the opportunity to move it up. So it was a tough trade from the get-go. Also, I just felt that the print, the print, a poor non-farm payrolls print in a net dollar, a strong environment was going to really make things difficult. And lo and behold, that's exactly what happened. I hope that you guys enjoyed this. Unfortunately, it didn't work out this time. We had a better trade last month. We're going to do this again, potentially in January. I've just got to see in terms of leave, but please join me again in January. If there's any questions, Howard's just asking for a 20-period simple moving average. Yeah, we can do that. Just make it a bit thicker. So there we go. All right, does that help there, Howard? It's just this this really kind of was a difficult part of the chart to deal with, because it was just moving that sideways and then it broke down. All right, guys, I'm going to wrap up here, and I want to thank you for joining, and we'll give it another go next non-farm payrolls. Thanks very much, guys.